And our first guest today on All About Bitcoin is CoinDesk crypto markets analyst Damanick Dantes. Welcome, Damanick.
Hey, Galen. Happy New Year.
Happy New Year to you. So, a slow start to the year for Bitcoin. What can we glean from the price chart so far to indicate where we might go from here?
Yeah, so sentiment has been extremely bearish heading into this year. Unlike last year, where we had a lot of the gains into the back half of the year, investor sentiment has been kind of dull heading into this year. And we've been stuck in this month-long trading range between 45 and 50K for about a few weeks. And now we're seeing a breakdown of that support from 45, and we're trading intraday around 44. It's tough to make an analysis on intraday moves. I think that's the result of, the Fed minutes came out and they said that they're pushing up the timetable for tightening monetary policy. So the markets, equities in general too, are selling off. So a lot of that volatility intraday. So we're looking for a day move somewhere around that support zone to see if the oversold conditions materialize. But over the long term, like on the weekly chart, momentum has definitely slipped, and that's an area of concern. So to me, stepping back and looking at the bigger picture, it means that upside might be limited this month. You might get some short-term buying activity, but the sellers are definitely in control.
How can we sort of augment that analysis a little bit and try to get a sense of what sentiment is reflecting in terms of flows or transactions or any other kind of fundamental data?
Yeah, so for that, we look towards the blockchain data. I was also showing that the number of transactions have been declining a bit. So typically during an upcycle, you see a burst of activity and more demand for block space, but some of that has been declining. So Glassnode says, with that decline, you might see some sideways movement persists in the price of Bitcoin. So that's a fundamental metric that, a lot of analysts are watching closely, and that's not as bullish as it was in prior cycles.
This is the number of transactions moving across the Bitcoin network. Is that correct?
Yes, that's correct. Yeah.
And to what extent do you think this is, to what extent is this a leading or a lagging kind of an indicator in your view, Damanick? Is that, I note that, right, transactions tend to, you see them swell, as you noted, in a bull market rather, and then you see them dip back in a bear market. Is that something that is kind of driving the price, or is sort of following the interest in the price?
Yeah, that's tough to call. It might be following the price. The demand is very price driven. So I tend to see it as that. But I think over time, a lot of folks look at these things in cycles, right? So you want to just sort of remove the noise and look at the average amount and things like that. So if the average is skewing one way versus the other, that might be an indication of a sustained move. But for now, it's just something that's very immediate and deserves some watch. And then another one was exchange flows. Go ahead.
Oh, yeah. No, go ahead, please. Yeah, let's talk about that.
Yeah, another one was exchange flows. So Glassnode was also showing that the 90-day moving average of exchange flows are picking up. And typically that's seen somewhat of a bearish sign, right? It just means that folks are moving their coins on the exchange rather than keeping them on their wallet. And the idea is that there's a sort of incentive to sell those coins or move them. So that might, point to some bearishness right there. But again, you want to see a sustained move and not just a spike up in an indicator.
Yeah.
So that's something that analysts are watching very closely as well.
Yeah, we were looking at this chart earlier in the week, I think, and it's worth noting in context that that Bitcoin on exchanges has been at historic lows. A net move in the other direction here, but as you point out, wait and see whether that is a sustained move or a sort of a dip, if you will.
Exactly.
Last thing I want to touch on here is Bitcoin dominance, which declined somewhat precipitously in 2021 and looks to be, I think, continuing that trend in 2022. Seems like the sort of the global risk-off sentiment is meanwhile, in sort of internal to crypto, there's a little bit more of an appetite for risk to move from Bitcoin into more volatile cryptos. Do you think that's a fair way to look at what's happening here? Or what do you see in terms of the relationship between Bitcoin and other cryptocurrencies going into the year?
Yeah, and that's been strange. With Bitcoin declining from that all-time high, you've still seen the demand for risk still pretty much strong in the altcoin space. And I think it's because, you're seeing a lot more altcoins come to market. There's been a lot of attention diverted away from just Bitcoin into more of these use cases like layer twos and things like that. So I think a lot of those coins have been grabbing greater market share, and that's what folks call the flippening. And that's definitely occurring. And, the Bitcoin dominance ratio is declining back towards April 2018 levels. And that's when we were kind of midway through that bear market. And I think that shows that, the risk appetite was starting to slow. And typically when the Bitcoin dominance ratio increases on a sustained level, that shows a flight to safety in a way. And that occurred in the last bear market. We're not seeing that yet, but we're approaching those lows. So I'll be watching that carefully. If we do see a flow out of the altcoins and into Bitcoin in a sustained way, that might, indicate
that might
some
be a scary
safety.
signal. Yeah.
Yeah, exactly. But we're not seeing that yet. The risk appetite is still pretty much strong.